Good evening and welcome to tonight's member-only webinar where we look at ASX investment opportunities in review for the 5th of July. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which provides access to our model portfolios across the ASX 2050 100 as well as the US S&P 100. If you'd like to know more about the portfolio strategies, please contact me on 1300 614 002. The technology we're using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for the year. People joining us for the first time during your 30-day free trial, don't hesitate to contact the office if you require some tuition on how to navigate the software and set up your model portfolio alerts. Moving into a graph of the Nasdaq to start with, the index remains above the average, so we've still got bullish momentum in the Nasdaq and in the S&P 500. We're not seeing quite that same level of strength in our domestic market. You can see here the interim indicator is the red arrow pointing down, so we just remain a little bit cautious, especially if we see a break in the Nasdaq below that moving average. If we look at the S&P, same thing, the market is extended above the average, but the interim indicators pointing down there, and we become cautious if we see a break below that moving average. With regards to the XJO, we're sitting below the overhead resistance there, so a little different to the S&P and the Nasdaq where they're making fresh highs. The XJO is not. From a sort of momentum standpoint, what we've seen, which I drew your attention to last week, is a minor break below that sort of support through this range here, and what we're really interested in is if the S&P and the Nasdaq move below that average, does that set up a pattern where the XJO struggles to break through this resistance, or are we putting in a base here and moving higher? So for the moment, the benefit of the doubt is that the market continues with its upward momentum, and we just get a little more cautious if we see that S&P and the Nasdaq break below that average. Tonight what I wanted to do is, rather than just go through the top 100, I wanted to take a slightly different approach tonight. We'll focus on the blog post, and then I'll have a look at what's in the ASX 50 model, and then I'll highlight a handful of opportunities that we have a high conviction position in, or in the process of building one. So the recent blog post, if you come into here, click on watch list, go down to the bottom, select recent blog posts. This gives you access to all the stocks that have been tagged on the blog within the last 30 days. Get the percentage gains to the top, organise them in buy signals. So I'm going to be going through the best performing stock. We'll get part way through the list, and I'll shift from stocks that are in under buy, under sell, and I'll just share some added commentary around why those still sit in our portfolio. Woodside Petroleum been bullish on this. Oil's remained above $70 a barrel, which should be a catalyst to cause these oil and energy stocks to move higher. They've really lagged, especially in Australia. They've lagged behind the strong energy complex. Woodside Petroleum found support here at around this $22 level. You can see now that the price action's above the moving average. We're continuing to hold a position in Woodside Petroleum, and really, unless it was to break back down through that 22 support, we stay bullish there, which is the communication that's been expressed on the blog. Oz Minerals shifted to algorithm buy signals here at around this $22 level, or $21.30. I think that's something to have a think about. Again, you might want to consider running a stop loss if we sort of see a break, maybe back down to that 2050 level. Within the resource area, our preference still remains Fortescue BHP, but we'll have a look at the names that are in the top 50 model after we've gone through these blog posts. Link Administration, this was flagged on the blog, support here at around this 480, 490. So don't mind that. Likewise with Computershare. I think Computershare's maybe a little expensive. Link's more attractive of the two. Cleanaway, support here at around this 260, but you can see here that I've also flagged down at 240, so the midpoint's around 250. We haven't built a large position here in Cleanaway. It is in the model portfolios. It shifted from sell conditions into buy conditions back at much lower levels at $2. The long-term fundamentals remain attractive for Cleanaway. What we're hoping to see is a slight break of that support and a trade down around that $2.50 level, which is where we'd look to build a position in Cleanaway. Macquarie's in the model portfolio. We've been fairly active in this name, taking positions off this 147, 148 level. The stock's now pushing about up towards that 156, 157. It is above the 10-day average. So within the financial spaces, we're CBA and Macquarie are the two that are under buy conditions, but Macquarie looks to be better positioned for growth than the other major banks. Breville Group, so we purchased this off the algorithm buy signal there at around 25. We've taken profit at the moment. Northern Star, still think there's opportunity in gold stocks, so we've seen Gold Road Resources shift to algorithm buy signals, but Northern Star remains our preferred opportunity. Gold should do well, especially if we get a little bit of volatility pick up in equity markets. We're seeing the longer end of the US yield curve, so especially in the 10 years, trade lower. So low interest rates in the US, maybe some capitulation on the market, worrying about short-term inflation, could set up an environment where gold can do better. So we're happy to stick with Northern Star on that basis. Bear really wouldn't bother too much with this until we saw the Nasdaq or the S&P break below that average, but that's obviously an inverse ETF that will go up in value if our market goes down. BHP still under algorithm buy signals, support there at around 45, so happy to maintain a position in BHP. REA, I flagged this on the blog. We saw them move further into broadening their mortgage offering to the market, but at 60 odd times earnings, like I've been speaking about in prior recordings where we've covered the ASX 100, it is under buy conditions. It has performed well since it shifted from sell into buy there at around $100, but at 60 odd times earnings, I just think it's getting too expensive where it is at the moment. This Cure ETFs, I'll flag this again on the blog. If you don't already hold this, so somewhere between that support of 58 and say 62, I think this gives you another chance to have a think about adding this into your portfolio for a rally from 60 back up towards that $70 range. Still think US biotech stocks and provide an attractive opportunity. Bega, this is a new one that's switched to algorithm buy conditions just in the recent weeks, and we've had a signal today on this one. The range that I've created here is initial support maybe somewhere around 550 to 540, where we'd look for these short-term indicators to start turning higher, and that'll be your first catalyst to think about adding a position in your portfolios to Bega. The stock's corrected from 660 down to around this 560, 550 level. My strategy to this is to build a position in Bega ahead of the upcoming earnings result and reassess the performance of the business following the earnings release for the August period. For the June 30 June period, which we're likely to see those numbers in either later this month or early August. But on this sell-off, I think Bega's an opportunity, and I suggest that you add that one to your watch list, or maybe make a note that you want to sort of keep a closer eye on this, and I'll certainly draw your attention to it again on the blog when we see these short-term indicators trend higher. Appen Group, not doing there at the moment. That was a small bounce which we've taken profit on. CIMIC Group, I continue to like this. I think this is, it's hard to pick the exact inflection point, but when we look at the work in hand and the contracts that the company's continuing to win, the de-risking of the balance sheet, we should be getting pretty close to where we're likely to see an inflection point and an improvement in fundamental news flow, which could last for a year or two, which would support a long recovery uptrend there. So we continue to follow CIMIC as a counter trend trade. Origin Energy, think about that as a breakout. The US tech stocks still just think they're a little expensive and maybe susceptible to a pullback. The banks still feel that NAB, Westpac, ANZ all look a little expensive. CBA's high quality. I'd be inclined to buy CBA on a sell-off, but maybe not quite that approach with NAB and Westpac. Still remain a little bit cautious on those, and we can see sort of the soft price action that we've had below sort of the resistance over the last week or two. Amcor, like this, we have a trading update on Amcor, and I'll go through some of this month's results, or this month's earnings schedule as part of tonight's recording. But Amcor deliver their full earnings on the 9th of August. But the company's already flagged that they're expecting sort of 10 to 14% earnings growth, which should mean that the stock finds support where it is at the moment there. TPG Telecom now under sell conditions, but expect this to sort of find somewhere between this $6 to $7 range is where I think fair value sits for TPG. And there we are, back to Woodside. So before I go through the earnings calendar this month, tonight what I want to do is just click on Model Portfolio and just remind everyone how this works. So come in here, select the model you want to look at. Tonight we're going to look at the ASX 50. I like to arrange this in getting the least number of days to the top. So this just means that this is the stock that was most recently added to the model portfolio, working our way down to the stock that's been in the portfolio the longest. The table includes the dividends that have been accumulated during that holding period. You can toggle through these simply by selecting the symbol over here. And I'll just move through these fairly quickly. So BHP's in the model, and we continue to like that. South 32's recently been added to the model. Santos, so we've seen an increase in these energy names with Santos, Woodside Petroleum, Beach, all under algorithm buy conditions, but Santos has been in the model since that $6.50 level and likely to be building a higher low there and a rally above the moving average, but preference still remains Woodside if you're having to select one over the other. Macquarie we like within the financial space, and that's proving to be right. Macquarie's rallied 6-7% versus the backdrop of the major banks really moving slightly lower. So Macquarie we continue to like and see earnings growth there. Treasury deliver their earnings. They have their full year earnings results on the 27th of July. So I would be surprised to see this sell-off that we're going through at the moment come back and retest this. I think you're starting to see a turnaround in the Treasury business. We'll certainly take a closer look at the earnings later this month, but maybe this is something on the trading side you could have a look at if we see it shift from the interim red arrow into an interim green arrow and then move back above the average. So I'll draw your attention to that on the blog. Centre Group's in the model portfolio, so that's been performing okay. Woodside Petroleum starting to see a recovery there. CBA's rallied strong off the algorithm signal there at $80 odd, so that's in the top 50 model, as is Woolworths. And as I pointed out last week, the spin-off of Endeavour Drinks, roughly $6, takes Woolworths back up to what would have been equivalent of around $43 odd, which is getting pretty close to obviously its prior highs over the last 12 months. So in the absence of earnings results that really are above analyst expectations, I'm more of the view that Woolworths is likely to trade sideways around this $37 level, but on roughly a 2.5% dividend yield, it's still attractive and offering some upside, some earnings growth as well. So happy to be a buyer of Woolworths on any softness, say sub $37. You still want to think about adding that to portfolios if you don't already hold it. Xero, just be patient here, wait for that to pull back, but it is in the model portfolio and performing quite well. I'll review the performance of these once I finish toggling through them. Goodman Group, switch from sell into buy conditions, a little expensive up here where it is at the moment. Like to see a pullback there, but it's been performing well since being added. Mirvac Group's doing well, as is GPT. Lendlease has come out with a earnings downgrade, so you're seeing earnings roughly 50% of where they should be, and that's a function of obviously disruptions to their sales and development channels as a result of COVID, as well as rent income. areas that have been highly affected, such as the UK, has had a substantial impact on the Lendlease business. Long term, if you're willing to look out 12, 24, even 36 months, Lendlease should be able to trade its way through this, and any weakness over the next 3 to 6 months would be a buying opportunity. Qantas performing okay after being added to the model. Stockland's doing well. Cochlear performed extremely well, but looking for a little bit of a pullback in some of these names. Aristocrat, so it switched from sell conditions into buy there at around $30, now pushing up towards 42. Computershare, as I mentioned earlier, it's in the model portfolio, maybe starting to look a little bit expensive though where it is. Wesfarmers been a great performer, and will be interesting to have a look at the level of growth that we see in Wesfarmers in the upcoming earnings results. A2 Milk, clearly this has been a disappointing signal that has been added into the model portfolios. The sell-off in the stock's been material, and we're yet to see it switch into sell conditions. So we're sticking with this name, and we've seen the stock recover from $5 back up to $6.70. So as long as the allocation to this is not disproportionate, the winners in the portfolio more than cover this, and we're happy just to hold it and wait for the recovery there. Fortescue continues to perform very well. Excuse me. So Fortescue continues to perform well. Sydney Airports, we saw a takeover offer at around 8.25 today, so that stock's jumped. That's one of the higher weighted stocks in our top 50 model. So we had a significant gain in that today, which was pleasing to see. Northern Star, as I mentioned earlier, I like this. So it's been under algorithm buy signals for more than 4 years. So originally when it switched from sell to buy conditions, and then we've had these subsequent signals all throughout this uptrend, and even with the sell-off that we've had at the moment, it remains under buy conditions. BHP covered that, and there we are. So that's back to the beginning. So if we just have a look at the performance of these stocks, so this is the percentage gain since they've been added into the model portfolio, and it includes the dividend. So as we go through, BHP's been in for 14 days, it's up 6%. Something like CBA's been in for 136 days, it's up 20%. Goodman Group, 173 days, up 19%. So there's only two stocks that are below the entry price, which is Lendlease and A2 Milk. If we were to have a look at the top 20 and just see how that's doing in comparison, the top 20, so out of the 20 stocks in the index, these are the ones that are in the model portfolio, and this is the date number of days that's been held and the percentage performance. So Fortescue is clearly one of the better performing stocks, as is Wesfarmers, Aristocrat, CBA. Woodside Petroleum, we're just starting to see that now perform as expected. So if you haven't spent too much time, have a look at the model portfolios. And then just to finish off tonight, I just want to go through some individual stocks that we've been talking about, that I've been covering in prior recordings. So Incitec Pivot, continue to like that, thinking that there's support there at around that 225, 230 level, expecting better earnings result in the second half. I won't cover the ones that we've already covered, or try not to. But BGA, Bega, I think you just want to make sure that you've added that one to your list there. Woodside Petroleum, you want to make sure you've made a note of that if you're not already in it. Cleanaway back at around $2.50, you want to make a note of that. On the counter trend side of it, CIMIC Group, think about support there at below this sort of 1960 level. A break below that, you might get stopped out, but hopefully we're at that inflection point there for CIMIC. Gold Road Resources, so preference still remains Northern Star, but Gold Road Resources in a backdrop. So they've had a production numbers that have come in at the lower end of market expectations, which has added to this sell-off here from 150 down to 130. But looking forward over the next 12 months, a combination of better gold prices and the company addressing their plant shutdown and maintenance issues that sees production get back to the higher end of that forecast range should be good for Gold Road. So think about that down at these levels. And then just to go through what's coming up this month. So Woodside Petroleum is the first of the major companies that releases their earnings results coming up on the 15th of July. So that could be a catalyst to keep pushing the stock price higher. Rio comes out with some production numbers the following day, so on the 16th of July. But we have Rio under sell conditions, and our preference remains BHP, Fortescue, South 32, and Oz Minerals within the resource space. The following week, so the week of the 19th of this month, you got BHP delivering their production numbers, and as these come through, I'll comment on them on the blog. But BHP under buy conditions, so we continue to like that. CIMIC Group reports their earnings on the 21st of July, so that could be a catalyst where we start to see better news and better forecasts from management, which could be a catalyst to see that inflection point in place there for CIMIC. South 32 has their production numbers out on the same day as CIMIC's result, which is, as I mentioned, the 21st of July. So South 32's gone from sell conditions, long-term downtrend, to now what looks to be the beginning of an uptrend and a buy signal there at around $2.74. It's been added into model portfolios. Santos has their production numbers the following day on the 22nd, on Thursday the 22nd. So Santos under buy conditions. Treasury Wines, as I mentioned earlier, keep an eye out for their results. Then we get, so Rio has, the following week, Rio has their half-year results. We've got Macquarie the following day on the 29th, which has their annual general meeting. And then you got Fortescue with their production numbers, which are due out on the 29th of July. So Fortescue, just recapping there, obviously under buy signals. And we've got this higher low that we're continuing to shuffle the support up there, but willing to stick with Fortescue, looking for that to continue moving higher. ResMed reports their results on the 5th of August. And we'll see this earnings calendar start to fill up a little bit more as we get closer over the next week or two. So we're just seeing some of these preliminary earnings schedules coming through now. So ResMed under algorithm buy signals, that's been performing very well. And then on the 9th of August, and I'll just finish with this week, with the week of the 9th of August, you get AZJ, which we've seen deteriorating earnings trends here in AZJ, and as a consequence, you can see it's under sell conditions with the red markers up the top here, the red boxes flagging the lower lows and the lower highs. It's not unless we really saw a breakout of this downtrend and a higher high and a shift back to buy signals, and that might be something just to keep an eye on in the back half of this year if we were to see AZJ shift into buy signals, and a catalyst for that could be just watching what that earnings result looks like on the 9th of August. Also on the 9th you got Suncorp reporting their earnings, and a preference within the insurance space is really IAG over Suncorp. We have Suncorp under sell conditions at the moment. The earning calendar gets pretty serious starting this week of the 9th of August. So on the Monday you've also got Transurban. Not expecting those results to be particularly good. Amcor on the 9th of August, and I expect that to do better than the market's anticipating. Then the following day on the Tuesday you've got James Hardie reporting. So that'll be Tuesday the 10th, James Hardie reporting. tend to feel that these building stocks now are starting to get up to levels of resistance where the PEs are a little bit stretched, and maybe there's the early signs of slight softening in some of the US housing market that could be a drag on James Hardie. Less so Boral, given the takeover that's in place with Seven Group. But I think James Hardie could be starting to get up near resistance at around that $45 level. On the 11th of August, which is the Wednesday, you've got IAG reporting their results, and within the insurance space, we'll be watching that one with great interest, thinking that IAG's maybe consolidating down here at support and ready to break higher, looking for that to move back up to sort of that $650 range. Also on the Wednesday, I won't cover the charts, but you got Computershare and CBA. Then on the Thursday, you got Goodman Group, which we've covered. Dow, so this is Downer EDI, which is under algorithm buy signals. It's performed well since shifting to buy signals at $5, rallied up to 6, now at 5.50, so it's 10% higher than where the algo signal triggered it. But we'll be watching their result on the 12th of August with great interest. Woodside Petroleum, their half-year result is on that same day, the 12th of August, and then on the Friday you've got Breville and Treasury Wines. So just to finish tonight, on the XJO, broadly speaking, still willing to look at picking up these buying opportunities, keeping an eye on the Nasdaq and the S&P to make sure that they don't break down below that moving average, and that'll sort of help create a guideline as to whether the XJO is going to trade back up through this resistance or whether we're going to get some sort of rollover below that. Thank you for listening in, and I look forward to speaking again next week.